Hi there, guys, and welcome to this week's Midweek with Indiacharts. This is Muskan Kapoor, your host, and I'm joined here with Jay Vora. So, April has started. The death and the threat of March is hopefully away from our heads now. So, yeah, let's hope this month goes positively for us. Anyway, I will just begin with the questions. So, we have the RBI policy meet tomorrow, firstly. So, what can we expect to happen further? Are we going to see more rate hikes? What do you think?
Yeah, so I mean, the consensus has built up that there will be a 25 basis point hike. Okay,
Hmm.
now one needs to understand the backdrop. Now, actually, inflation in India is pretty much under control. I mean, it is still a little elevated, but it is very much manageable at this point of time. So, but the only issue is that the US, I mean, the Fed is hiking the rates over there. Okay, so just to keep our market attractive, I mean, the RBI has to hike the rates so that even the debt over here looks attractive and the money
Correct.
flows into our country as well. So that is the dilemma in which RBI is stuck right now. And with that backdrop, there is
Hmm.
a possibility of a 25 basis point hike.
Correct.
But most of the participants are now expecting this to be the last hike. I know, I mean,
Hmm.
this was being told, I think, I mean, when it was previously hiked as well. But I
Hmm.
think the broader message is that we are coming towards the fag end of the hiking cycle.
Hmm.
Okay. And if you see the yields in US, okay,
Yeah.
especially the 2 year, I think that has collapsed to 3.85 or 86 when I had last checked.
Hmm.
So despite over there the Fed funds rate, which is around 5, somewhere around there, despite of that, the 2 year has now collapsed to 8.36. That means the market is now factoring in that at some point of time the Fed will start cutting the rate. Okay, so given that whole context, I think we are at the fag end of the rate hike, and there is 25 basis points still that is expected. Now, one of the key data point which will be seen by the market very closely is the non-farm payroll data, which we might see tomorrow. Okay, so over there, if we see weakness, then that will be a furthermore confirmation that we are getting closer to the rate hike. Because today, I mean, no, 2 days back we had got the job opening data, so that was a bit soft as well. So over there right now the job openings are still very high, but that has now cooled off to almost a 2 year low. Okay, so in that sense, the cooling off is being seen now in the in all the US data points. Now the job data, that is the non-farm payroll, that was a blowout job data a month back or a couple of months back. So that needs to see some cooling off, so that will give the furthermore confirmation that the inflation is cooling, and the rate hike cycle
Correct.
which we have seen, so that should
Hmm.
come to an end.
Correct.
So
Makes
that
sense.
will basically not put the pressure on RBI to hike furthermore rates. Okay,
Correct.
so that in turn will be good for India as well.
Hmm. So it's like an obligatory hike that because something is happening, so it has to be in the same cycle, for instance.
Yes, so because see what happens is that India wants to attract money, right?
Hmm.
So
Correct.
how will they attract money? By giving a better value to the
Yes.
counterparty, right?
Hmm.
So if the US is hiking the rate, India has to match that, or to
Yes.
be attractive, to attract
Hmm.
some money. So
Yeah.
that is what is happening right now.
Correct. Talking about attraction, I wanted to talk about setups or trends that you're observing at this time, which are of high convictions right now.
Yeah. So I think I'll share the chart. So I think
Yes.
at this point of time, gold and silver is something which stands out, and the
True.
reason, I mean, we had highlighted this in the previous week as well. But
Hmm.
if you see the chart of gold, I mean, this is the weekly chart. So as it is, you can see that it is trying to come out of this consolidation, okay, which
Correct.
is first positive thing. You can see I mean, this gold taking support at the 20-week moving average, and then it is
Hmm.
reaching higher and it is making higher high and higher lows. So this is
Yeah.
positive. Now, when we zoom out a bit, okay, and we see the chart all the way from 2010-11, then you can see that there is a big cup and handle that has been forming. Okay.
Correct.
So once we see the breakout from this range, I think that is where the up move can really pick up. Okay. And the other thing I see a good setup is silver, because now that has again broken above its previous high. Okay. And it is inching higher. Now these are all medium to long-term setups that are playing out, and that should unfold over the next few weeks or few months. But one needs to understand that in the short term, there has been a very sharp rally. Okay.
Correct.
So there could be a cooling off. Now, one more data point to back that is basically we had posted about the DSI as well. So I'll just quickly show you. So DSI is nothing but the daily sentiment index. Okay, it is basically the survey of all the people or analysts on the street, and based on that, they come up with the percentage bulls or the percentage bears which are there. So you can see right now for gold and silver. Okay, in silver there is 91% people on the street, who are expecting silver to be bullish. And similarly for gold, there are 86% of the people who believe that there is bullishness in gold. So usually whenever the reading comes to around 90 or so, we do see some knee-jerk reaction. Okay. So that means that if this up move has played out in silver, so you can expect a kind of a correction towards its previous low, or maybe it can take some time and test the averages. So that can be possible. So that is one point of caution which I want to tell our viewers. But the point I'm trying to make is that if I see from 6 months to 12 months perspective, I think the setup of gold and silver is beautiful, and I think it should do very well. Also, if you see for silver, this trend line is broken. Okay. Now it might take some time, or it might consolidate about this trend line for a while. But I think once that is done, you can see the next leg of up move that can be furious, and one needs to understand from the medium to long term perspective, this is actually wave 3 that can play out. Okay, because this is wave 1, this entire deep correction is wave 2. Now this entire wave 3 is playing out, within which this is wave 1, this is wave 2. So usually wave 3 of 3 is powerful. Okay. So that is something I think I am very excited about, and I'm hoping to see the up move play out as I'm anticipating. Now again, this is a disclaimer that this is not, I mean, I'm not recommending or advising anything, but it is just that the setups look so beautiful, and they are kind of textbook pattern that I found it worth discussing, especially for gold as well.
Yes.
So in gold as well, as I mentioned, that there could be a similar setup. Sorry, because right now gold has moved very fast. Okay. So there can be a bit of consolidation in the near term, wherein the averages get tested, and only then it sees a pickup. So the broader point is that in the short term, there could be some consolidation, but from medium to long term perspective, it is looking very good. And I think because gold and silver is looking good, now this is giving me an early confirmation that the dollar index might go down. Okay, this we had discussed it earlier as well, that when you see the retracement, it has not even retraced 38.2. And when we see the weekly chart, it took resistance at the weekly chart and a minor bounce, and it is now falling. Okay.
Yeah.
So I think that once the low is broken, I think the low is of 100.82. Okay. So I think once this low is broken, we might see the next leg of down move in dollar. Okay, which can be very positive for gold and silver, and obviously for the equity. Now that takes me to the third point, that equity, then looks very attractive. Firstly, we had already shared all the sentiment indicators which shows extreme negativity for the equity. Now the decline of dollar is furthermore confirming that. So I
Correct.
think if you have to ask me what are two things which I find very exciting, I mean, one is gold and silver setup, and the second
Correct.
thing is equity. That is because now dollar seems to be topping out and it is resuming its downtrend. So if that is the case, then that is supportive for both these asset classes.
Correct. Makes sense. These are definitely worth mentioning, things that are attractive at the moment. Talking about this, I would like to recall something we were discussing last week. We were talking about how the panic bottom is made, or if the data points that had been presented yesterday, have they been met? Are we at a bottom? Is that in place? We discussed quite a few pointers around these lines. So I want to know if we will be continuing the uptrend according to the facts that we had discussed.
Sure. So, I had mentioned that Nifty midcap, especially, it had broken that trend line, and
Correct.
which was scaring people, because at that point of time you could literally feel the pain, because I actually got few phone calls as well to what to do. But when we had to see the data points, I mean, when you see the data points, so this was the breakdown point, okay, where I mean, it actually looked very scary. But when you believe the data points and when you saw the data points, they were all pointing out towards oversold zone. So, I had last time also shown over here that if you see the net short positioning by FIs, that has been it has been a record shorting by FIs. Okay, because I don't think we had got such a deep oversold reading, and now the Nifty is recovering from that deep oversold reading. Okay, so now ideally, whenever you see this up move unfolding, typically what happens is that this negative position, they actually come back to the 0 point, or it also goes into green as well. Okay, so right now you're seeing the short positioning at 1,40,000. So still there is a lot of ground to cover, especially by the FIs. Because right now what is happening is that despite this up move, which we have seen, we haven't seen a material short covering from FIs yet. Because now this is absolute term, right, which I'm showing. But after the expiry, if you see the short positioning in percentage terms, then it is still at 11. Okay, and historically, if you see that whenever it has been in such oversold zones, okay, whenever it has been in such oversold zones, we have seen a good pullback or a rally in the Nifty index. Okay, so I don't think this time will be any different. I think we have already started seeing a recovery. Now this should only accelerate once I think the Nifty has to break out from this trend line. So if you see specifically the Nifty index, I think it is trading in this channel. Okay, so last time when we were discussing, the Nifty was just consolidating at the lower end of the channel, and now post this breakout from this consolidation and then closing above the key daily averages as well, it looks very likely that eventually this trend line will also get taken out. And the reason why I feel that is, like I showed you this data, because right now what has happened is that despite this up move, the shorts have not been covered by FIs. Okay, so that is where I feel that there is a lot of leg on the upside that is still pending, because even in a conservative case, if we call for a retracement of the entire fall, okay, for that as well, it has done only 38.2%. Now 50 and 61.8% could still come by in the next few days or few weeks. So for that, the 38.2% retracement, that is at 17,613. Now in the short term, this level can be an important resistance. Now the reason why it can be a resistance is because there is a gap area which is there at 17,575. And then you can see this trend line and the Fibonacci retracement, converging around this 17,615 mark. So that can be the near-term resistance zone, which the Nifty can see. So, what might happen is that there can be an up move, then there can be some consolidation. Then again, we can see a pickup. And the reason why I am still banking on the pickup is because of the FI's data, which is still indicating an oversold zone. And apart from that, we have also seen dollar index that is weakening. Okay. So I think all of these factors are supportive of the fact that the equity should do well in the near term. And yes, so even if you see the Nifty mid cap index, that had given a breakdown, and now there has been a sharp up move post that. Okay, so basically the people who have turned bearish over here, okay, bearish over here, now they have actually missed the bus, because many people anticipated it is a breakdown and we might see a free fall, but you can see that it just took 3 days and it is almost back towards its previous swing high. So I think that over here as well, if the averages are taken out, you will see furthermore bullish momentum that is going to continue. Now, just to clarify to our viewers, the averages which we use is basically 20-day average and the 40-day exponential average. Okay. So I'm expecting that once these averages are taken out on a closing basis, then we can see furthermore up move extending. And also one more thing, I don't know if I had discussed this last week or not, but if you see, the monthly average was still held in the Nifty mid-cap index, and it made a doji. Okay.
Correct.
And the good part was that Nifty and Bank Nifty, they actually posted a green candle. So if I see over here, the Nifty index monthly chart, so the Nifty index posted a positive monthly close from after taking support at the 20-month average. Now that gives me a working level, wherein I can say that this is an important swing low. That is nothing but 16,828, which we formed recently. I think now that should not be broken. Okay. And if that is not broken, then we can see a very good up move, retracement, or pullback, whatever you want to say. That can be seen in the days to come, and that can fuel the positive momentum. Now, one more data point which I had discussed last time also was the open interest. The open interest for Bank Nifty was unusually very, very, very high. Okay. Now, in the past 2 days, okay, yesterday the open interest was down by 30%. And if I see the open interest today in the tool, so it is down, it is again down by 20%. Now, this is obviously during the day data. So EOD data can change a bit. But yes, the indication is that further more short covering rally has been seen in Bank Nifty. Now, add to this the FIs which have still not, closed their short position. So I think even in Bank Nifty, if you see, the Bank Nifty index is actually, leading the Nifty index, because it had broken above the 40-day average, couple of days prior only. And in fact, over here as well, you can see this trend line now getting challenged. Okay. So over here, this trend line is broken today.
Correct.
And now what is happening is that the Bank Nifty is testing this gap area. Now this gap area ka high is at 41,208. Okay. The moment it closes above this gap area, I think the next resistance then will be 41,400. And I think once this trend line is taken out, that is where you can expect the bulls to dominate in the days to come. And the beauty is that in each of these legs, okay, you can actually see an impulse move that is developing. Now, there are early indications that this is a bottom. Now, when we see a good 5-wave rise, okay, when we see something like this, then that is where we can confidently say that the medium term bottom is done. So right now, all the data points is indicating that the bottom is done. But if we see a clear impulse from the bottom, then there will be no scope for an argument. Okay. So now
Correct.
this is what we are watching out for. Basically, we want a good impulse to develop. The moment we see a 5-wave rise, that means that this low is a bottom, and then ideally this should not be breached. If there is a correction, there will be again a 5-wave rise that would follow. Okay. So now this is something that we are closely monitoring, and I think once we get a clarity on this pattern, we will surely come and update our viewers. But as of now, the things are looking good, and the FI data is furthermore supporting a case of a short covering rally in the days to come.
Correct. Makes sense. All the cues are pushing us towards a rather positive momentum, like as compared to as we were past month beginning week. So this month's beginning of the week has been relatively much better than how we were before. So yes, hopefully it does lead in that way, and we confirm multiple things that we are looking at. Yes, thank you so much for this entire session.